everybody are talking about the Trump's tariff. If you go to the AI agent, to the Forecaster AI agent, as you can see, you can also find one hot topic button here. What to know about tariff, Trump's tariff. And as you can see, on April 2, which is tomorrow, the White House is expected to unveil a new plan for reciprocal tariff under President Trump's administration. Okay, and this is something that is scaring the international market because this initiative reflects President Trump's aggressive approach to trade policy. So, what we have to understand, of course, the way Trump is doing these economic moves, it's really strange because he's really aggressive, and this is something that um, it's strange for one person like for a person like how you expect to be the president of the United States of America, because he's the most powerful country in the world, and you expect to have someone a little bit more relaxed, let's say, a little bit more not so aggressive. But anyway, the um, this approach really scares the market, okay? And this is why we have to go back to the S&P 500 for first of all, in order to understand if it's time or not to buy. But first we have to go to Trading Economics website, where we have to understand if Trump moves is something correct or not. And in order to understand this, we can go to United States, and I would like to show you something in order to understand this strategy, okay? And if we go here to the balance of trade, as you can see, please follow my uh, my I mean follow what I would like to tell you. If we watch at the data, which is the most important thing to do in a moment like this one, where we have the most powerful person of the world, which look like a crazy man, okay, because he's always shouting, he's always yelling at people what to do and what not to do. I mean, it's a difficult situation, okay. He look like a crazy man, but I really think he's not crazy, and I would like to show you this. This is the United States balance of trade, and very simple. This is a chart that tells us how much money United States pay for buying something, goods or services from the outside, from abroad, and how much how much services and goods they sell outside. Okay, so how much they buy minus how much they sell, we have the balance of trade. And as you can see, at the moment, they are spending more money than the money they are making through selling something outside the United States. And this is something that Mr. Trump really ate because, as we said many times, he's a very simple guy. He's a very normal guy. He grew up in the 80s in New York City, building apartment, and I mean he was a constructor. Okay, so he has a very simple mind. Okay, so this data is what is triggering Trump's mind at the moment, because at the moment United States are spending for buying something outside the United States more than the money they are making selling something outside. Okay, and this is exactly the data is doesn't like to Trump at the moment. So um, putting tariff, it's something that will allow in the long term to let companies come back to the United States manufacturing. Okay, because at the moment, in order to have less cost, all the business, car makers and everything went abroad in order to have a lower cost. And of course, with lower cost you can decrease, you can increase your margins. Okay, of course in the long run it's something not good, especially because if we go here on this website and we compare the trade balance to the GDP, as you can see, the trade balance amount, okay, compared to the GDP ratio is only 27%. This is a very important data because you understand that the outside of the United States economy represent only the 27% of the entire economy for the United States. Okay, it means that the really important part for the United States economy, it's the inside economy. It's the amount of money people who lives in the United States spend in the United States. Okay, and so this is why this data, the negative balance of trade, the deficit, you can say deficit when you spend more money than the money you make, it's really scares Donald Trump. Okay, because in the long run, these deficit lead to some big problems, which are many. For example, it's difficult for people who lives in the United States find a low salary job. For example, if you um, if you buy everything from outside, you are more dependent from foreign countries. Okay, so this data, which is the data is scaring right now Donald Trump, is something he really would like to fix in the short, medium, and long term. And this is something correct. Okay, this is something correct. I mean, Trump is doing what a politician should do, which is thinking for the long term of his country. Okay, for example, if we watch, look, um, if we watch trade to GDP for Germany, for example, okay, trade to GDP, let me see. Uh, we can do like this. Let's go on Google and we search the Germany trade to GDP ratio. As you can see, for a state like Germany, okay, which has a positive trade balance, as you can see here, you can see, but we can see it much better. For example, on trade economics, we can go to Germany and we can go to balance of trade, and as you can see very easily, the the balance of trade for Germany it's positive, It means they gain more money selling than the money they are gaining by buying something outside. Okay. And very important, if we go here and we compare this number to the GDP, as you can see, it's 90%. It means that for Germany, for example, the money they are making outside are really important because they are 90% of the GDP. The same data for the United States, it's only 27. This means that the internal economy for the United States, it's more important than the outside economy. Okay. So this is why I really think that Trump is looking for the long run, is doing something good for the United States. So, do we have to be scared about these very strong and aggressive politics? I don't think so, because if we go back to the S&P 500, for example, and first of all, we go to the ranking page, as you can see, at the moment, the S&P 500 is still undervalued. Okay, we have an index which is undervalued compared its fair value. If you are new to this webinar, if you are new to the Forecaster terminal, very easily you can open a specific company. For example, here we are on Microsoft. For every single company in the fundamental page, we have the fair value calculation based on 3 different approaches. Okay, at the moment, for example, Microsoft, it's undervalued by 21%. Okay, in the ranking section, for every index of the world, we know all the companies, the components for the index. For every single company, we know how much the company weight inside the index, and of course we know the fair value, and this is how we can calculate the fair value for the entire index. Okay, and at this time the S&P 500 is undervalued. Just to let you know, it was the beginning of 2024. Prices for the S&P were at the all-time high, and exactly in that moment, the index was fairly priced. Okay, it means that the fair value and the current value for the S&P was at the same level. Okay, at the moment we have higher prices compared to the beginning of 2024 for the S&P, but we have a 14% undervaluation. It means that companies during this period made a lot of money, and we expect for all these companies to make more money again in the future. Okay, so we are talking about an index, the S&P 500, which is of course an American index, but inside the index you can find companies that are active all across the globe. It's right now a very diversified index, even geographically speaking. Okay, so really I don't think we have to be scared about this tariff, because in my opinion, I mean, uh, Trump, at the end of the day, Trump is not stupid. Uh, he probably is looking for something that will work in the long run. And no matter what, at the end of the day, we are talking about companies that are constantly making money, and they will make money even in a tariff environment. Okay, if we go, for example, on the seasonality, which is really amazing at the moment, because if we plot, for example, the seasonality, the 3, 5, and 7 year seasonality, as you can see, the correlation between the actual price and the past seasonality is very high. It means, for example, it means that the actual price, the current price, is behaving exactly like it did in the past. Okay. So, for example, if we watch here, look, seasonality expected a low, a very important low on the 12th of March, and actually we had a very important low the 13th of March. Okay, so this pattern, the current prices are doing exact what it happened in the past. Okay, so in this moment we really can expect a very important low here on March. Okay, and then we can really expect a really important turning point here at the beginning of May. Okay, so this is something really interesting we can see. Of course, we have um, some sectors that have been really damaged by this tariff, and for example, the automotive sector has been really eaten it by the tariff. Okay, so for example, of course, you know, I'm Italian, and of course, you know, for example, Ferrari brand is an Italian brand. They make cars, and in this day the stock is stumbling on the stock market. So for example, I have to search something for you. um, Prices up 10% in the 5 days ago. We had this news that Ferrari says it will raise prices by 10% on some models to offset auto tariff. Okay, so if we go here and we go to the Ferrari stock, okay, as you can see, is stumbling at the moment because we are minus 10% in just 1 month, which is something really strange for Ferrari, because historically this stock has been really, really strong. Okay, because of course, fundamentally speaking, we are talking about a company which is growing its sales, it's growing their net income, it's very solid, because if we go to the Altman Z score, as you can see, it's 9.43. It means it's really unlikely to go bankruptcy, okay? Because it's really a solid company. Also, the Piotrowski score is very high, number 7. Benisham score, of course, is very high. It's okay. I mean, it's a company. This company is unlikely to be manipulating its earnings, so it's a solid company. And also talking about the value generation, as you can see, the company is constantly doing buybacks. Okay, they constantly repurchase their own shares, which is something that increase the intrinsic value for the company, okay, for all the other shares that are on the market. And as you can see, forecaster tell us that the company is robust. Something really, really interesting, guys, if we do the full analysis thanks to the AI agent, you can activate the AI agent here on the forecaster and you can ask for a full analysis. What I always look is the moat evaluation, is the competitive advantage for the company. And as you can see, talking about Ferrari, we have a competitive advantage rating of 9/10, which is something amazing. You cannot find many companies with a 9. For example, you can find Nvidia as a 9 rating, which is amazing, okay? And Ferrari, it's really an amazing company because, um, as I told you, uh, they increased prices by 10%, but this is not a problem at all. This is a problem for others car makers because when I don't know if you know, probably yes, because Ferrari it's a very well-known brand, but you cannot buy a Ferrari like this. Even if you are very rich, you cannot go to Maranello in close to Modena in Italy and buy a Ferrari the day after you decided to buy a Ferrari. At least you have to wait for 2 years, at least 2 years you have to wait in order to receive exactly the Ferrari you want. Okay. Of course, you can buy a second-hand Ferrari. Okay. But if you would like to buy a Ferrari from Scuderia Ferrari in Maranello, Italy, you have to wait at least 2 years. Okay. So imagine you are a client, you decided to buy a Ferrari, and the dealer call you and say, look, you are waiting your Ferrari since 2 years. It's here, it's ready, your Ferrari is ready, but the price increased 10% because of Trump. Do you want the Ferrari or do you want us to buy to someone else? Of course, you are buying a Ferrari. You don't mind if they ask you for 10% because of Trump, okay? No, Andrew, I never ordered a Ferrari. I bought few years ago a Porsche, but I will never buy a sports car anymore. I'm not interested in a sports car, really. I prefer to go on holidays. Anyway, if you are a rich person, okay, as is saying in the chat, rich people can afford another 10% more. No problem. But these are not the clients, the clients Trump is targeting, okay? Trump is targeting normal people. Trump would like normal people to buy something is made in the United States because, as I showed to you, the real important part of the United States economy is the internal spending. So he needs to stay strong on the internal spending. He needs the factories go back to the United States so they can hire low income people, so these low income people can spend and they can buy a car and an American car to go to work. Okay, so let's try to understand if it's time to buy Ferrari or not, because look, the prices are tumbling, and believe me, this is a really nice occasion for all of us. Because look, if we go here and we compare the net income line to the stock price, as you can see, stock prices goes exactly where the net income is. Okay, in the long run, every stock prices follow the net income. That's it. And in this case, thanks to Trump tariff, this stock is stumbling at the moment. And as you can see, we are creating such a big opportunity here because prices for the stock is going lower and it's going very far from the income line. And this is an opportunity, guys. If we go here to the fundamental page, as you can see, we can find that the company is undervalued by 6%, which is something amazing, guys. You can really, it's very difficult to find Ferrari undervalued, okay? Because it's a company, thanks to the fact the company has 9 on 10 rating in the moat, okay? The moat analysis. It's a company that everybody is looking every day, okay? The competitive advantage of Ferrari, it's humongous, okay? I would like to show you something. If we go here to the transcript section of the forecaster and we ask to the AI agent to summarize the transcript, look what I show you. Look, this point, client loyalty, approximately 81% of new cars were sold to existing clients and 48% to clients who own more than one Ferrari. Do you understand what I mean that a 10% increase in prices doesn't affect this company? Okay. Anil is asking me if you should buy Ferrari from the NYSE or from the Milan Stock Exchange. Probably for me, I'm Italian, for sure it's better to buy on the Milan Stock Exchange. I don't know from where you are, but probably you have, it's easier for you. Anil, you are in UK, for you probably it's easier to have access to the NYSE. Okay, yes, but definitely it's better to buy it on the NYSE. Okay, so this is an amazing opportunity we have right now because Trump especially is targeting the automaker, the the automakers, okay, this industry, but Ferrari is going down in the short term, but it's such an amazing opportunity. And look, if we go to the overbought and oversold section where we have our amazing market mood meter, we are definitely in an oversold, in a panic selling situation. And as you probably know, in the panic selling situation is where we made the best bargains. Okay, look, here we are on a very important low with our indicator, which is at the lowest since the last, let me see, maybe 5 years. Yes, in 5 years, only 2 times market mood meter has been in this panic selling situation, okay? So this is why we are really buying heavily Ferrari shares, okay? Very, very, very interesting. Of course, you can just decide, you can just buy and invest in Ferrari right now if you are looking for the long run. If you're looking for a more, let's say, short-term slash trading trade, you can use the market mood meter for timing. And in this case, I really suggest you to go on Forecaster.biz, going to the features page and click on market mood indicator. And here you have the example how to use this indicator in order to have the perfect timing to get inside the long position. Okay,